Yes, people, a very happy month, all of you. So, guys, we started with a brand new topic in the last class, which was Introduction to Accounting Standards. So, in this topic, the only one concept that is left to be discussed, or one topic rather, I would say, which is yet to be discussed, is Ind AS. But before we head forward, I would like to do a quick recap of what we studied in the last class. So, last class, we understood what is the meaning of GAAP. First of all, GAAP full form. Generally accepted accounting principle. Sir, what is GAAP? GAAP is basically providing you with the accounting principle, accounting policies, accounting standard. Basically, in short, GAAP is going to guide you on certain rules and regulations which you'll have to implement in preparation of your financial statements. In preparation of the financial statement, or before you prepare the financial statement, you have to do accounting and the preparation of the financial statement should be according to the accounting principles, accounting policies, accounting standard that has been laid down by GAAP. So that once you follow all these rules and regulations, the standard at which the accounting has been done, the standard at which you try to present the financial statement is in a very nice position. You elevate the standard of presenting the account by following the accounting principles, accounting policies, and standards. You elevate the way you do the accounting of the transactions, the way you present the transaction in the financial statement. The standard gets improvised. So GAAP is going to give you basically an outline circle telling that if you are doing accounting or if you're presenting the data in the financial documents or financial reporting, if you're doing, that should be based on certain things. We should have accrual concept, we should have going concern concept, then there should be consistency, prudence, etc. So they've given one outline circle. In this outline circle, or within this outline circle, you as a country are allowed to develop your own accounting standards which suits your country, which suits your country's economic situations, or legal conditions or business environment. Whatever suits, accordingly you can modulate your accounting standards. Correct? So GAAP is basically a boundary, it's an outline, it's a framework within which every country needs to develop their own standards. You can adopt whatever GAAP says as it is. Wherever required, you can do the modulation. So GAAP is a framework that outlines the accounting standard, principle, procedure that guides how a financial statement should be prepared and presented. It's a very broad framework. It is not a narrow framework. Why they kept it broad? Because keeping different countries into mind, keeping a lot of things into mind, they gave multiple flexibility and options. So that's why it is very broad. But in that every country can either accept this broad way of accounting, or you can narrow it down whatever suits your economic conditions. So GAAP is primarily talking about this going concern concept should not be violated. You have to keep going concern concept in mind and then develop your accounting standards. Should keep consistency, accrual, prudence, materiality, matching concept, and more accounting principles into consideration while you draft your accounting standards. So we have in India accounting standard and Ind AS. Both accounting standard and Ind AS is developed on a base, on a foundation called as accounting principles, accounting policies, conventions, etc. This is the base. On this base only what has been developed, accounting standard is developed, Ind AS is developed, everything. So GAAP is basically the foundation of accounting, which outlines the complete structure of how the accounting needs to be done, how the data needs to be presented. Like that, it's a broad framework. So now, keeping that in mind, everybody's come out with their own GAAP. So India has got something called as Indian GAAP, in which we have a framework of accounting standard and Ind AS. US came out with US GAAP. UK came out with UK GAAP. There's something called as IFRS at global level. Who doesn't want to apply your mind in preparing your own accounting standard, you can adopt the IFRS as it is. Those who don't want to put your brain into it, those who don't want to put your thought process into it, those who don't want to work hard, what you can do? Copy paste the notes. When we are preparing for the CA journey, either you apply your mind and prepare your own notes, or you copy paste from what I give. So what strategy did you adopt? Did you adopt convergence strategy or adoption strategy? You adopted adoption strategy. But India, US, UK, what they did? They adopt convergence strategy. So they have their own accounting standard, but in accordance to the GAAP. That's why they call Indian GAAP, US GAAP. Means what? We have our own what do you call it, way of presenting the accounting standards or preparing accounting standards. But yes, we are in line with you. Who? GAAP. Why different GAAP? Because every country's legal, economic, and business environments are different. So according to that, you try to come out with your own standard principles for accounting the transactions, presenting and preparing the financial statements. So how did all this come into picture? So before 1973, we didn't have any rules and regulations in picture. So everybody did the accounting the way they feel like doing. And by that virtue, what happened is investors back then, keeping the financial data what they presented, they invested the money, they lost the money. So what happened? A lot of people started being deceived by the companies, because you as a shareholder, let's say you are the shareholder of Reliance Limited, do you know what is happening inside Reliance Limited? If you are a shareholder of Reliance Limited, do you know what is happening inside? No. So how do you know what is happening inside? Depending on the information what they provide. So that information what they're providing is not reliable, not transparent. Then the decision making that you take will go for a toss, no boss. So therefore, after this scams that happened prior to 1973, at the global level, we feel the need or the urge to come out with some global standards. That is when IASC was formed. What is IASC? International Accounting Standard Committee was given the responsibility that understand what is the problem that is going around the globe with regard to the accounting. You come out with a framework, you give a guidance on each and everything so that we can have a uniform financial statement prepared across the globe. So that was the primary responsibility of the IASC. So IASC, it's a committee constituting members coming from different countries. So they participated, the experts in the respective country from the accounting field. They came together, formed this committee, and they developed standards by name IAS. What is that called as? International Accounting Standard. So the purpose of IASC, that is International Accounting Standard Committee, was to develop something called as International Accounting Standards. This is used to prepare the financial statement, which is reporting as per the global financial reporting norm. It's a global level of financial reporting. So from 1973 to 2001, during this period, this particular board, IASC, was highly active, and they came out with how many IAS? 41 international accounting standards they came out with. But this particular board eventually got old. The thought process was old. They were not able to align with the new development that was happening on the dynamic basis. So therefore, they felt that the entire committee needs to be revamped with new people coming inside with new thought process who are more vigilant. So therefore, what they did is they scrapped this committee and they came out with a new board called as IASB. In 2001, IASC was restructured into more independent and technically focused body. So with this, what do we understand? This particular body, they wanted to keep it more independent, more technically focused, and they should be able to cope up with the dynamic changes that is happening across the globe. Business got evolved like anything. So according to that, you have to again come out with accounting norms fast. You can't say, no, 20 years ago, I issued some accounting standards that only will follow. Arey Baba, in today's scenario, a lot of development happened. New things have come. You have to be more robust, more quick in giving the solution that how I should account this. If you take your own sweet time to guide people, then people will do the accounting how they feel like. Again, the purpose of accounting standard or GAAP is not serving the purpose, no. So therefore, they had to scrap IASC and come out with a new board with new energy, enthusiasm, who's got new thought process, who can act very fastly. They came out with the concept called as International Accounting Standard Board. And the responsibility of this board was what? The responsibility of this board was to develop IFRS. Before IFRS being developed, their responsibility was to correct IAS wherever possible. They tried to modulate IAS wherever possible. They tried to revise it. Over a period of time, they felt that few accounting standards, that is IAS, International Accounting Standards, was useless, redundant. So they scrapped it and they brought into a new AS called as IFRS. So at present, if you see, IFRS is there full-fledged. But parallelly, there are certain accounting standard which is coming from IAS, which IFRS is not imbibed. So at present, IAS and IFRS both are running parallel at the global level. So IASB is called as International Accounting Standard Board. The restructuring aimed to give more authority, independence and global legitimacy to the standard setting process. Okay. So this IFRS is focusing more. It is more robust in terms of how the global financial reporting should happen, how we should be able to pool the global capital, how we should be able to fundraise in the global market, how the global listing needs to be done. One of the major focus of IASB was also in this direction. And this was lacking with the IASC. So IASB became more robust in terms of these three things. And IFRS is being developed on what principle? What is the, sorry, what basis? Not principle. What basis? They are principle-based set of standards. Means what? They've given a broad framework. And within that, to give flexibility, they've given you multiple options. So it is principle-based, which means what? I'm giving you an idea and suggestion. According to that, you apply your mind to that particular situation. You can modulate within that framework of IFRS. That is called as principle-based. But India said that no, we will follow rule-based. So the accounting standard, what they developed is what? Rule-based. Because if we give people that, for this situation, do this, for that situation, do that, then what happens? We'll not have a control. Everybody again try to prepare the accounting transactions, or they'll prepare the financial reporting or statement in their own manner. Again, the purpose will not be achieved. So instead of giving them option, you give only one option. Follow this only. Instead of giving multiple options, when you all of you know that in real life also, when we have multiple choices, we tend to get confused. Should we do this or should we do that? So same problem here also. So in accounting standard, India, what they did is they said, no, we will not do principle based. We'll go rule based. We will not give choices to people. We will limit their choices. We will tell this is what you have to do. And we are following that. So IFRS and Ind AS are principle based, whereas accounting standard is rule based. So from 2001 onwards, IFRS was being implemented all over the world. 17 major IFRS are there as of now, and more IFRS is being developed in the years to come. In this IAS, some are scrapped, some are still valid. And the ones which has been valid, they have been revised over a period of time. Okay. Now then we spoke about the types of accounting standard applicable in India, in which in the last class we completed a discussion only on the accounting standards. So today let's do a quick revise of AS, then we'll go to Ind AS. So accounting standard means what? Again, it is a set of policy documents. This policy is what policy? Accounting policy, accounting rules, accounting principles, accounting conventions, whatever you say. So this is prepared keeping what as a base? Keeping GAAP as a base. So GAAP gave a framework. Using that framework, within that framework, we developed the policies called as accounting standards. And this policy, who developed? Who developed all this? Accounting Standard Board. Accounting Standard Board is Bacha of ICI. You know what is Bacha of ICI? It has been created, constituted by ICI. So that's why we say it is ASB of ICI. So ASB was given a separate responsibility. This board's responsibility is to develop the accounting standards. How to develop accounting standards, we'll discuss now. So AS is a written policy documents formulated by ASB, constituted under ICI. Under what framework? Under GAAP framework. Under GAAP framework. This point I'll discuss in the upcoming sessions. Upcoming point. AS is considered rule-based and not principle-based. Okay. So when was ASB formed? In the year 1977. In the year 1977. In our textbook, ICI module, they've given a specific date also on which date it was formed. So maybe if possible, I'll incorporate that date and also give it to you. So formation of ASB was done by, that is who created ASB? ICI created ASB. What is the primary role of ASB? To formulate accounting standards. And for that, what they do, they engage, they have a discussion with multiple people, multiple experts, bodies, regulators, academicians, professionals, to understand what problem people face in the real life while accounting. So keeping all that in mind, they try to develop AS. So before we go to MCA, NAFRA and all, let's come back to the process of how the accounting standard is being worked. So step-by-step process of implementing the accounting standard. What is the first what is the first step here? This ASB will engage with multiple people who are at the ground level. Ground level means what? Those people who are dealing with the business people. We'll try to understand from them what is the problem that people are facing while accounting. Because for the problem these people are facing, for that we will give the guidance. So you first try to identify the areas where the problem is there. What problem is there? What is your concern? You come and tell me first. So first they will identify the areas where the problems are there and where there is a need of AS is there or not. There, whether there is a need of AS or not. Second, what they do is they constitute various study groups. The objective of the study group is what? First, to understand the problem. So they'll understand the problem. Based on that, they'll come out with solution. So they'll come out with the standard called as accounting standard. In that, they'll mention what is the scope of this accounting standard. Scope means what? In this AS, what are we trying to address? What is covered and what is not covered? So they'll set a scope. Then they'll set the objective. Why are we coming with this accounting standard? Why are we doing this in this manner? They'll give a reasoning for it. Then they'll come out with the process. They'll come with the process. Complete rules they'll come out with. So they also discuss about how presentation needs to be done, how the recording needs to be done, how the disclosure needs to be done, how are you supposed to measure a transaction. All the accounting standard primarily discuss on what aspect. All the accounting standards in what aspect they do deal. Every A should talk about how an item needs to be recorded in the books of accounts, how a transaction or event should be recorded in the books of accounts, when to be booked, at what time. So in AS9, which is the next standard that I'm going to take, in that I'll teach you at what point of time you should record your sale. AS9 is not teaching you how to do the entry. Entry all of us know. But this entry, when to pass, is what AS9 is going to teach us. So when are we supposed to record the entry? If at all you're recording the entry, what value? How much should I record the entry for? What should be the value? Cash account debit to capital. How much value? Measurement it talks about. Then once you record, once you measure it, how do you present this data in the financial statement? How are you supposed to disclose this information so that the financial statement is having complete transparency? How the ultimate purpose of disclosure is what? To ensure that we are transparently disclosing everything. And based on that, you as a shareholder can make a decision whether to stay in the company or leave the company. So all the accounting standards are based on these aspects. Very, very important from the examination point of view. So now ASB will discuss on all of them. Then they'll come out with a draft called as preliminary draft. This preliminary draft is prepared by whom? Study groups. Study group will give the input, and that has been prepared by ASB. So ASB and study groups together, they develop this draft called as preliminary draft. Can we release it directly? Can we release this directly? No. This draft, again, we have to consult with those people. Na? Consult with whom? We have to consult with the council member of ICAI. This council is what created ASB. So we have to consult with the family member, head of the family, that this is what is a problem, and for this problem, this is the solution that we have come out with. Okay, not okay. Just asking your family member is not sufficient. You have to ask your external family members also. Who are they? Regulators such as MCA, RBI, SEBI, CBT, CNDG, Scope. So many people are there. Not just that, industries who are actually facing the problem. You ask them, no, I'm giving a solution to your problem. Do you think this is workable, not workable? You had a problem. I'm giving solution. By this virtue, your problem is getting solved or not. You have to get the input from that person also, no boss. Industry are the people who are doing the accounting. They have the big problem. So their problem is what you're trying to solve it. So you have to consult with them, no boss. Then look, this problem you said, we gave a solution. Okay, not okay for you. So we will consult with all of them. They will accordingly give their inputs. If there is anything that they have to add on based on their practical experience, because these are the people who are working at the ground level with the entities. ASB sitting where? Delhi. AC room. What practical knowledge they have? So they get the practical insights from these people who are dealing with the end customer on day-to-day basis. So that's why the input from these people is very, very important. Once the input what we get from these people, we will incorporate that in the preliminary draft and make a final draft called as exposure draft. Ascertainment of views from the different bodies. Once you take that views, you implement that in the document, and the document thereafter that you prepare is called as ED, exposure draft. And this exposure draft, you can't still release it. You will give it to whom? Public for public comments. You take their opinion also. No? In public, who comes? The practicing CS. You and I, if we're practicing, we are not in ASB, we are not in council, we are not RBI, SEBI, nothing. We are the one more set of people who are dealing with the client. So client will come and ask, sir, how to account this, how to present this. Whom will they ask first? CA, practicing CA. And you were nowhere there in this scenario. So you should be consulted, no boss. Practicing CA will ask whom? Teachers like us. So this is what the problem is. How do we deal with it? What does the standard say? Because we teachers are in continuous touch with the subject. In practice, after a point, what happens? You are totally away from the subject. So the academicians, practicing CAs, they have to come and give their input. So we give the input based on the exposure draft. So taking our inputs into mind, then ASB will revise, modify, and finalize the AS now. So this AS which has been finalized is been sent to ICA for its approval. ICA will issue AS and it will be binding on whom? Non-corporates. The AS that is issued by ICI is binding on non-corporates. Example for non-corporates: sole proprietorship concern, partnership concern, LLP. These are called as non-corporates, trust, societies, etc., etc. Which means Babu Pani Puri Wala, if he is doing business, he is a non-corporate. Should he supposed to follow accounting standard? The answer is 100% yes. But you go and ask him, what is accounting standard? Are you following? Lusa, Pani Puri Venuma, Vandama. Adu mattu sollupa. That's what he doesn't understand the accounting standard, which means that he is not preparing accounts as per AS. Then ICA is not taking any action. Is ICA taking any action? Not possible. ICA is told that whenever these non-corporates come to you for preparing the financial statement, why will they come to you? Babu Panipura, why will he come to you? He will initially not come. When will he come? When he's crossing the income at certain level, where there will be compulsion that he has to prepare accounts. They will come to you. And when he is coming to you, for preparation of financial statement, you should say that, no, you have to prepare now as per AS. Whatever you did earlier, no problem. You are small. You are growing. So you have to apply AS. Only then I'll be able to sign your reports. Second, he'll come to you for going bank loan. If you go to any bank asking for bank loan, bank manager will first ask, where is the financial statement? You'll go to whom? Babu Panipuri will go to whom? He'll come to you only. Now when he comes, you will tell him, now you have to follow accounting standard. If you want my signature, they have to redo accounts as per accounting standard, only then I'll sign, or else I'll not sign. So initially, people will not take accounting standard seriously. But wherever they come with the regulators, such as any dealing that they have to do with the regulators or the bankers, that time when they need, no, now I need financial statement. That is when they'll come to you. And that is when you will impose the accounting standard on them until you will not go behind. Until not go behind. Am I loud and clear? Online people.
Yes, sir.
Am I loud and clear?
Yes, sir.
Yes, sir. Yes,
Now, the accounting standard issued by ICAI is not applicable on the corporates. For it to be made applicable on the corporates, you have to get the notification from MCA. So therefore, ICAI will now recommend these accounting standards, which is approved by the council, to MCA. ICAI will recommend this to MCA. MCA will consult with NAFRA. It's not NAFRA. NFRA I changed in the Excel sheet. New PDF I'll give. MCA will consult NAFRA. NAFRA will give some inputs if applicable. So after we receive the inputs from NAFRA, that is after they review the document and they will give their inputs, what do we do? MCA will give this inputs to whom? ICA will again modulate whatever is required, and finally they'll give the document, they'll resubmit to MCA, and MCA will finally notify. So where does this notification being uploaded, or rather I would say it's been incorporated in the law? Companies now it is 2021, that's right. Companies, one second, I'll just show the document. Now MCA will show that under Companies Accounting Standard Rule 2021. Before 2021 it was 2006. Then later this was modified to 2021. So if at all you want to go and see what is the accounting standard notified by MCA, this is the place where we'll go and check for the notification. Any problem here? Once it has been notified, the standard becomes legally applicable to be followed by all the corporates. Not all the corporates, some corporates. Why some corporates we'll be discussing when I do chapter 3 of accounting standard applicability. But for non-corporates, whatever is issued by ICA, that becomes legally applicable. Very, very important point. For a second, forget your lunch today, but do not forget this point. AS that you prepare means the AS that ASB is preparing and ICA is approving or MC is approving cannot override the country's law and its local regulation. So if there is any other law or local regulation and your ASB is contradicting that, so which will prevail? That law and that local regulation will prepare. For example, when you prepare the financial statements for bank or insurance business, insurance company, first this insurance company and the banking company has to follow the norms laid down by RBI. So if RBI and AS are contradicting, so these banking companies or insurance companies, they have to follow which norms? First, their regulatory authority, which is IRD and RBI. Banking Regulations Act and IRDA is that. So based on that, you will follow first. So accounting standards will be followed secondary only. So AS cannot override any country's law and local regulations. So as a bank, you have to first follow the RBI norms wherever required. Then wherever RBI is not stopping, if you want to present something extra, disclose something extra, then you can follow AS, nobody will stop you. Jesh, yes or no? As of now, how many standards has been notified? Earlier 29, then 2 was scrapped, AS 6 and AS 8 got scrapped. It got merged with another 2 AS, which I'll be discussing in the respective AS. Therefore, now it is how much? 27 notified accounting standards that the companies has to follow. Till this, what we did, a revision of last class. Now, the second point of discussion is Indian accounting standard. At the CA intermediate level, we have a very, very limited information about the Ind AS that has been given. Because Ind AS on the whole is applicable to you at the CA final level. But a glimpse of it, a small introduction of that has been given in your CA intermediate level, and that is what we're trying to capture. Meaning of accounting standard, Indian accounting standard, Ind AS, short and sweetly called as Ind AS. It is a set of accounting standards. So this is also accounting standard. This is also accounting standard. So accounting standard is accounting standard. Ind AS also is accounting standard. Issued by whom? ASB of ICAI. Accounting standard also issued by ASB. Ind AS also issued by ASB. Notified by ministry in consultation with NAFRA. AS also is being notified by MCA in consultation with NAFRA. Ind AS also notified by MCA in consultation with NAFRA. But AS is local language. AS is local language. You and I only can understand. It is full of Hindi, Tamil, that's all. Local language, understand? Hindi, Tamil, Kannada, Malayalam, which only we can understand. If you ask a foreign country, a foreigner comes and goes for a tour in Tamil Nadu. If English is not there, what will be his condition? Gone. Nothing will understand. Imagine in India, if we did not have English. Imagine in India, had we not had English, only Hindi and the respective state local language. Will any foreigner come to our country? Why is not coming? Our country is very beautiful. You make your country very beautiful. You say that compared to any other country, our tourism is very cheaper. 50% discount will give. Still people will not come to you. Tell me why. Language barrier. What they say, you will not understand what they are saying. They will not understand. I mean, what you are saying, they will not understand what they are saying. You will not understand. So what happens at the end? The entire purpose of the visit, tourism, is meaningless. So with this, what do we understand? If you want to deal with the international people, what is the common thing that binds you? International language. So accounting standard is pakka local language. Hindi, Tamil, all the local languages, accounting standard. So we could not compete in the global level. So therefore, now what happened? We had to come out with a new language called as Ind AS. It's a global language. It's a financial reporting done in the global level, so that we can go to the other countries. Other countries can come to our country. For that, a common language was created called as Ind AS. So, Ind AS is accounting standard issued by ASB of ICAI, notified by MCA in consultation with NAFRA, that are converged, not adopted with IFRS. So IFRS is what? Already an existing English language. But this English is very tough. It is not easy English. It is very complicated English. So we said that we can't adopt the complicated language because this is not suitable for our people. If I present this complicated language to our people, they will not have the interest in learning the language. So therefore, I have to make the language simplified. So I will not adopt your language as it is. I will try to converge with your language. Converge means what? I will try to integrate with the language. Means whatever possible, 80% I'll try to adopt your words, your sentences. But 20% I will modulate wherever I want to modulate. Because this 20% I will toggle with, so that I can retain the interest of my people in your language. So therefore, we did not adopt IFRS. We converged with IFRS. We converged, not adopted with the IFRS. And this IFRS is issued by whom? IASB. I'm trying to give you an understanding parallel with English language. I would understand this feeling. All of you. Very good. Ind AS are designed to ensure transparency. Sir, in accounting standard also we had transparency. No, that transparency was not sufficient. Who felt this? Foreign companies. Foreign investors felt that your data is something which I don't rely on. I'm not able to rely on your data because I don't understand your language. Accounting standard is local language. In local language, when you're trying to tell me that I'm transparent, I'm not able to understand. So you tell me that I'm transparent in my language. So they tried to come out with a different language, more robust way of accounting and presenting the financial reporting, which was more transparent than what it was in the accounting standard. So we try to make it, see, already accounting standard is transparent. Ind AS try to make it more transparent, more consistent, more comparable. And with that, what happened? The global people, international people could relate to what you are talking. When you spoke in the language of accounting standard, the international people could not understand your language. They could not relate with you. Therefore, when you went and asked paisa from them, they said, get lost. I don't understand. What are you talking? So now, if you want to talk, now if you want to get paisa from those people, you have to talk in which language? In their language, what they understand. So what is that language? நான் எங்கடா டாலர்ஸ் சொல்லி சொன்னேன் டாலர்ஸ் வந்து யுஎஸ்ல மட்டும் இருக்கு நான் குளோபல்ல பேசிட்டு இருக்கேன் நீ you have to talk in what language IND-AS what is IND-AS nothing but foreign language but little bit modified IND-AS is converged version of IFRS and therefore based on the IND-AS what financial system that you prepare are having enhanced disclosure. The disclosure in IND-AS is more compared to the disclosure norms in the normal accounting standards. Sir, how did IND-AS come into existence? What is the historical background? All this is there in textbook, but very in complicated manner. I've tried to simplify it. Pre-2000 era, before 2000, Indian GAAP was there. We prepared accounting standard keeping GAAP as a framework, and that was called as Indian GAAP. So before 2000, we had something called as Indian GAAP. In Indian GAAP, what did we have? Only accounting standards. So this is GAAP. Based on this GAAP, we came out with something called as Indian GAAP. And based on this Indian GAAP, we prepared standards called as accounting standards. So only accounting standard was there before 2000. Before 2000. India followed accounting standard issued by ASB of ICAI. That is issued by ICAI through ASB. That is ASB of ICAI. Post 2000, what happened? After 2000, there was globalization, privatization. You would have studied this in your school. Liberalization, privatization. So they felt that if you want to reach your business to international level, if you want to deal with international people, if you wanted international people to deal with you, then you have to come out with a language what both of you understand. So now, globalization and need of uniformity in post 2000 in 1991 all this happened liberalization privatization but immediately we didn't realize 10 years we tried to deal with international people but in what language accounting standard language 10 years we understood that this language is not going to help us in 2001 we decided that no now we have to learn English language means what we have to learn IFRS we have to learn IFRS so with globalization of capital market Indian companies started raising capital from global investors but inconsistency in financial reporting with international peer become the barrier. So after 2000, we wanted to grow at the international level. So you wanted funds from whom? Foreign investors. When foreign investors saw an opportunity in our country, they wanted to invest. But what stopped them from investing? The financial statement that they were reviewing, they could not understand. They felt it was transparent, but not that much transparent. They felt the disclosure was there, but that much disclosure was not there. So therefore, they could not decide whether to invest in this company or not. Because a foreign investor, when he tries to invest, no, he's not investing 1 lakh, 2 lakh. He's investing how much? 10,000 crore, 20,000 crore, 1 lakh crore. That is the investment. So with that big investment, I don't even know what the company is doing properly. Then on what basis, on what trust should I invest in the company? So therefore, the standards that we were following back then called as accounting standards was completely inconsistent. Not reliable, was not transparent, and therefore, we could not get money from the global investors. Okay, not okay. We could not get money from the global investors. In 2006, decision of IFRS convergence was made. The ICI, in consultation with MCA, announced its intent. Please understand, in 2006, we announced the intent to coverage the converge Indian standards with IFRS, but not to adopt. Instead, converge and make it suitable to our country. So, in short, in 1991, privatization, liberalization happened, where people given more opportunity to do more business. So, government said that now go ahead, you are on your own, do business, earn money. With that money, give me taxes. From 1991 till 2000, we tried to explore the opportunities which is at the international level. So we found that in the international level, there's good opportunity. We can do a lot of exports from here to other countries. We can earn in dollars. We can import from other countries because the quality of certain raw materials are better in the foreign countries. We can import from there. We also understood that the outside people are interested in investing in our business. But all this could not happen in 2000, 2001, 2002, 2003, 2004, 2005. Why? Why this could not happen? Because the language in which we were communicating, and the language at which they were communicating, both were not same. They felt that our financial statements are not that much robust. They are not that much strong, transparent, reliable. So even though they wanted to invest in our companies in India, but they could not go ahead. So government of India back then, they wanted to understand why people are not investing in our country. Because government will ask, no, other government, come invest in my country. Government of India will ask, Apple, invest in my country. What will he say? No, I'm not investing in your company. This is the problem I'm facing. So government put a pressure on ICI, telling that, what are you doing? Do something. We want international people to invest in my business. That is in our country. If you don't come with the flexible accounting standards, then we will not get fund from other countries. How will we grow? How will the GDP of the country grow? So the government had put an enormous pressure on ICI. ICI, in consultation with MCA, they said that, okay, let's do one thing. Let's create our language which we will understand, which they can understand. So they thought of taking IFRS first as it is. But when they read IFRS, we found IFRS language very complicated. So our government said that, ICI said that, no, we are not adopting as it is, because your language is very, very challenging, very tough. If I give this language to my companies in our country, they will reject outrightly. So we can't adopt as it is, but yes, we can converge. Converge means what? Whatever you're saying, 75, 80, 90% will keep it. Remaining 10-15% will try to modulate. Who said this? MCA, ICA. So basically, ICA is the primary person dealing with the international bodies. So ICAI said that we are not going to adopt your IFRS, but we are going to converge with your IFRS. So they asked why, what is the reason? Because whatever IFRS is saying is not 100% suiting my country's legal environment, economic environment, and business environment. So accordingly, to make it suitable, we'll try to make the changes here and there. So 2006, we disclosed our intent to converge. Convergence did not happen. So in 2011, first notification came. What was the notification? First set of Ind AS. 35 standards were notified in Feb 11 by MCA, which means from 2006 to 2011, ASB of ICAI was working on developing the Ind AS. And through MCA, 35 standards were notified till Feb 2011. But implementation was deferred due to certain issues. But we could not implement that in 2011. So they came out with standards, but still we could not implement. Why? Because we had a lot of issues. One example is tax issues. The tax law in our country versus what was there in other country. Because we converged with the IFRS. So IFRS got different tax norms. How do you account for that? And we had a different norm. So that was not coinciding. Like that, we had small, petty more issues which were yet to be addressed. So therefore, even though Ind AS you came out with, but you could not implement it. So that implementation was deferred, postponed. So AS came into picture, notified, but we were not able to follow that and we deferred it. So notification was deferred. Then what happened? In 2014, a new government was formed. A new government of BJP was formed. In that election, after the election got over, they had the new government comes out with a new budget. In Feb 2014, the Congress government had come out with the budget. So after election results, again, the new government will come out with new budget. In that budget, which happened in July 2014, our honorable Finance Minister India back then, late Sri Arun Jaitley, in that budget, that is immediately upon the forming a new government, they came out with the budget. In that budget, they announced the urgency to converge the existing accounting standard with IFRS through Ind AS conversion strategy. Now they said that 2006, you said intent is there. Now it is 2014, 8 years has gone by. What the hell are you doing? Because of your slow pace, you're going very slow like tortoise. We are losing the opportunity of getting money from the foreign countries. Our company in India, Reliance Limited, Adani, Ambani's, all these people are not able to get the foreign investors. Like that, there's so many businesses, we're not getting the opportunity. Why? Because ICA was slow, MCA was slow, everybody was slow. So they said that nothing doing, you have to do something and act fastly. So FM cleared that when in 2014. So in July 2014, Honorable FM of India, back then, late Sri Arun Jaitley in the budget announced the urgency to converge the existing accounting standard with IFRS through Ind AS conversion strategy. Don't think this is my own story. Everything is there in your book. I've taken just the bullet points. I've made it in a more structured manner. Everything is there in your book. 2015. Now, after Sir Arun Jaitley pressurized the ICAI, scolded ICAI, then what happened? ICAI acted very fastly. So ICAI, MCA, everybody, it's not only ICAI, everybody were working very slow. You know now government officials work very slow, everything. So accordingly, after this, in the what do you call budget, everybody acted fast. Everybody started acting very fastly. Pursuant to this means what? After this session, budget session, pursuant to this, MCA notified companies, that is MCA notified Ind AS, where in the company's Indian Accounting Standard Rule 2015. Accounting standard is notified where? Accounting standard is notified where? Companies Accounting Standard Rule 2021. So accounting standard is notified here, but Ind AS was notified where? In companies Ind AS Rule 2015. So pursuant to this, MCA notified companies Indian Accounting Standard Rule 2015 wide notification dated 16 February 2015. So in Feb 16th, that is 16 Feb 2015, a revised roadmap, how we should implement Ind AS in a very phased manner was decided. So Ind AS was brought into picture with a phase-wise implementation. First, we'll try to apply this Ind AS on the super big companies, then on big companies, then on big companies, medium companies, small companies, like that they came on the applicability for implementation on the phased manner. So pursuant to this, MCA came out with revised roadmap for phased implementation of Ind AS from 16-17 onwards. So Ind AS, the companies in India had to start applying Ind AS from which year onwards? 16-17 onwards for certain class of companies. Certain class of companies means what? They said back then, if you are a company whose net worth is more than 500 crores, if your net worth is more than 500 crores, you have to compulsory follow Ind AS. I'm just giving you an example, which is true. 500, more than 500 is not namesake, I'm telling. This is true. This was the first notification that came. In the initial notification, they said that any company whose net worth is more than 5 crore, net worth means what? Shareholders funds is more than 500 crores, you have to compulsory follow Ind AS. Anybody's net worth below that, no need to follow. Plus, if you are a banking company, insurance company, NBFCs, you don't have to follow. When in 2016-17, they said. Now, still on the banking companies, insurance company, Ind AS is not applicable. Though they're trying to bring them in this radar, but still RBI and IRDA, what they did, they are preventing from entering into Ind AS. But NBFCs are now already come into Ind AS. Initial in 16-17, in phase 1, NBFC was outside the purview of Ind AS. Now they are into purview of Ind AS. Are you able to understand what happened? Are you able to understand the complete history? Online people, okay or not okay?
Okay, sir.
Okay, sir.
Yes, sir.
Convergence with IFRS leads to following benefit. What is the benefit? Global comparability means what? Now, when you prepare a financial statement on the basis of Ind AS, Ind AS is what language? Foreign language, which means the global investors, the global company, international investors, they could understand your financial statement now. So therefore, they could compare their standards with your standards. They could compare their financial statement with their financial statement, with your financial statement. So therefore, it facilitated global comparability. Investors can now, which investors? Foreign investors can compare Indian companies with the global counterparts. We have something called as MNC. What is MNC? Multinational company. Multinational company means what? They're operating not just in one country, they're operating in multiple countries. So now let's suppose I am having one MNC. I have one of my company in India, one in US, one in UK, one in Australia, correct? So you prepare all the financial statement as per the respective countries. In India, let's suppose I'm following Indian GAAP accounting standard. US is following a different manner, UK different manner, Australia different manner. So now I am a person who's based out of one country. You are trying to present me the financial statement in 4 different country languages. Will I understand? Will I be able to compare which country's business is doing better? Everything is same business. Let's say I'm into dairy business. Dairy means what? Not that dairy, phone dairy. Dairy. Milk, Amul. Yeah, dairy business. I am into dairy business in all the 4 countries. Now, all the countries are coming out with different financial reporting. So for me, For me, comparison of the financial reporting, is it there? No. But now what happened? Now India at least we try to present the financial statement in what format? In a language or a format what foreigners can understand. So now what happened? Anybody who's preparing the financial statement based on IFRS and you prepare the financial statement based on Ind AS, comparatively was comparable. 80-90% was matching. So therefore you could understand, you could compare, okay, this business is good, not good. So therefore this Ind AS paved the way for comparability at the global level. So improved inter-unit, inter-firm, inter-industry comparison. Because the financial statement what you prepared and the other entities prepared, since everything was there in the common language, you could facilitate the inter-unit comparison, inter-firm comparison, inter-industry comparison. Transparency and disclosure. IFRS converged Ind AS. IFRS converged Ind AS provided more detailed, transparent disclosure, thereby gaining the confidence of the investors across globe. IFRS nahi. IFRS converged Ind AS. I've changed it. In my Excel sheet, I've changed it. The new PDF that I give. Here, the word IFRS will not be there. IFRS converged AS. I'm talking about Ind AS. This entire information, what we're talking about, Ind AS, not IFRS. So IFRS converged Ind AS, which you implemented, gave you more detailed disclosures. They gave you more transparent disclosure. And therefore, people started gaining the trust on the financial statement that you are presenting. So people got trust on your financial statement. We gained the trust and confidence of the investors across the globe. And once people have the trust on you, if you ask money, they'll give money. So this paved the way for raising the global capital. So easier access to global capital. International investors demand IFRS compliant financials. So what we did not adopt IFRS as it is, but we converged with IFRS. Now, the financial statement that you're preparing based on Ind AS, which is converged part of IFRS, is a primary condition that was put forth by whom? The international investors as a condition to invest in the Indian companies. So foreigners said that, look boss, if you want me to invest in your company, you have to either prepare the financial statement based on IFRS, if not at least Ind AS. Because we don't understand your language, accounting standard. We don't understand your language. You have to learn our language. If not fully, at least slightly. So we came out with a slightly language called as Ind AS. So this convergence opened the door for raising the global capital. So where we are struggling to raise the money from the foreign investors, this Ind AS helped us to gain more money from the foreign investors. Not just that, since the financial statement that we are preparing is understandable with the foreign people, now this stock of our company, we could list in the foreign stock exchange. In a stock exchange outside India, we could list it there also. So enabling, so this Ind AS, what you followed, this convergence of IFRS has enabled the Indian companies to list their company's share in the foreign stock exchange, attracting the foreign investors. Correct? No? A company, let's say I'm a company, I have a share which is trading in stock exchange. What is the benefit of that? The benefit of that is one share which is 100 rupees. If I put this in stock market, if I create a demand and supply, 100 rupee share is now becoming how much? 10,000. How much profit I'm making here? 9,900. So stock is one of a kind of a goods, like how you buy the goods and sell goods. No, stock, your share has become like a tradable product. So that is the advantage of listing the stocks in the stock exchange. You get an alternative, way to earn money. As a business, you do business and profit. But now your shares, that is your stock, your share in profit is converted to a product called as stock. Stock also you're trading, means apart from getting money from your business profit, by trading the shares of your company, you're getting more profit there. So two ways of earning money. So like trading in Indian stock exchange can give you more opportunities of earning. Listing this in foreign countries also one more way of earning money. Without global standards, that is Ind AS and IFRS, we could not list our companies in the foreign stock exchange because the foreigners did not understand our financial statement. So they said that the financial statement that we are not able to understand, why will we invest in that company? I would want to invest my money in that company where I get an information or a feeling that this company is doing good. I don't understand what you're doing, boss. Therefore, I don't have a trust and confidence on you. Therefore, I will not be interested to invest in your company. Correct? But by applying Ind AS, the financial statement that you're preparing based on Ind AS has given an opportunity to do the listing of your company share in the foreign stock exchange. Are you able to understand the difference? Boring, huh? Chechi, 2 to 3 marks, it will come in the board main exam. Anybody who is getting 146 out of 300, fail or pass? Fail, because pass is 150. Today, concentrating today is very difficult. But tomorrow, if a question comes from this, if you're not able to get a 3 mark, no, that time you'll feel that why didn't I concentrate in class? Every single minute that I'm spending for you is to ensure that the 1-2 mark where you're about to fail, from that we can try to recover. If you want to know the pain of failure, ask the people who have failed. They'll tell you what is the pain of failure. So every single minute that you are in the class, Nishi, every single minute that you're there in the class, every single minute that you're at home, if you don't dedicate 109, 1000%, if you don't dedicate to your learning, practice, revisions, take it from in writing. Passing through is very tough. Out of 100 people, only 15 people are able to clear on an average in every attempt. On an average, I'm talking about. Remaining 85% are not able to clear. Do you think that they're not capable of clearing? In that, there's so many people who have cleared foundation. Means what? They proved that they can do CA. Still, they are not able to clear inter in first attempt or second attempt. Why? Lack of many things. Not choosing the proper academy, not attending the classes properly, not doing sufficient revisions, not giving tests. Everything, every single thing matters. Not choosing to learn things conceptually, trying to by heart. So many things are there which will lead to your failure. Not just one reason, multiple connected reasons. So if I'm putting so much efforts for you, then what should be your responsibility? To listen to class. I try to make this data more crisp and precise. If you look at the language which is given in textbook, you'll not even feel like reading that textbook. I'm telling you. Try to read that entire textbook once on your own. You'll throw it away, it's my guarantee. But now what I'm doing, I'm trying to explain each and every point in a very crisp manner, so that these points at least directly you can write in the exam if they are asked upon. And if you do not listen to the class, then what do I say? I'm not saying everybody is not listening. At least I can see some 4 or 5 faces who are constantly diverted. You can ask your friends who are studying in other academies that how much of this has been taken by them. I spoke to at least 15 students in 15 different academies. I'm talking only South India, where they try to skip this. Or they'll do it very fastly in a way that you understand nothing out of it. In North India, I spoke to at least 3-4 academies. They do this. They only encourage me, do this properly, Pratik, because here and there in some attempt, this comes for 3 or 4 marks. We did Schedule 3. After Schedule 3, what? Buyback. In buyback, there's a concept of dividend, or Schedule 3 is there? Buyback. In one attempt, they asked the question for 5 marks for dividend. Latestly, they asked. 2018, 19, 20, up to that range, they never asked. So what do people think? From this, what question will come? They didn't study and go. Those who studied and went, those who studied that topic very well, they got 4 or 5 marks from this entire concept what they studied and went. And those who didn't study, thinking that it will not come, they didn't get marks. They didn't even know how to answer it. Today, most of the academies are trying to, cut short and teach what is essential only to pass the exam. Somewhere between 40, say 60 or 70, you should get. For getting that, what is required, that much they will teach and go. If question comes above and beyond that, then what will you do? And are you studying now only for the purpose of clearing exam? Tomorrow, when you go for articleship, if they ask you all these little bit questions, your senior can ask, your junior can ask, client can ask, the CA at the client place can ask. In the client place, there's a person who did CA inter final multiple times but couldn't clear, he can ask. If you're not able to answer, what will you say? Inter mudichitendra, CA mudichitendra, idu kuda therilla unakku. You'll not ask. And I'm not teaching something which is totally not even required. This is there in textbook syllabus. There's so many things which is not there in syllabus. That and all I'm not taking. I can add so many things to this. They're not going. We're trying to only discuss crisp things. That also you're not concentrating. Then what is the point? I don't understand. For me, doing away with this or just reading this or giving, okay, I've done my notes, you just take and read it. How long does it take? Do I need to sit and prepare, revise, take class on this? Not required. And that too, to give you more comfort, initial 25 minutes we spent on revision also. Again, I took effort for revising. Why? So that this data goes very nicely into your mind. So if a question is being asked upon, you will be able to present it better. Why I'm doing revision in class? So that the data will be stored in your mind in a better manner. Why so much effort? In other places, people don't sit and do revisions and things in the classes then and there. They take class, then leave it. Separate revision batch. If at all they'll come out, they'll come out. But nobody in the class, they'll do multiple revisions. Anyways, improved financial reporting enhances credibility and the governance in the financial reporting. Group consolidation. What is consolidation? Group consolidation. I have a company in India. I have a company in US, UK, Canada, Australia. Every country will prepare and give me my financial statement. So I'll get one FS from Australia, which Australian CA will prepare. I'll get one financial statement from India. Indian CA will prepare India. But all of them are separate, no boss. I want to know, see, for you, the company is different, country is different. For me as an owner, for me, all companies, my company, no boss. So what do I need? I want everything to put together. I want to know the total turnover of all the countries put together. I want to know total profit of all the countries put together. I want to know the net worth of my company, all companies put together. So for me, what do I need? I want everything to be combined. And you have to give me one single financial statement. That is called as group consolidation. Imagine Australia is preparing the Australia is preparing the financial statement in their language. USA is preparing the accounting standard or the financial statement in their own language. India is preparing the FS in their own language. If all the FS, the basis of which you prepared is different, the basis is constantly different, can I consolidate all of them together? No. But now that everybody is speaking a common language, IFRS or converged IFRS, all of them now are in similar lines. So consolidation has become easy for me. Merging the financial statement has become easy for me. Merging the financial statement of multiple companies of multiple countries had become easy for me because of this or due to this convergence. Merging the financial statement of international parent company with those of its Indian subsidiaries is known as consolidation. Apple company is based out of USA. That is where the company started. So can I say that is parent company? So Apple has got one company in the Indian country. India, they have one more company that is called as subsidiary of that. So now our FS of Apple, Indian subsidiary, they want to merge with the parent company. So now what happened? USA is preparing the FS based on USA GAAP, which is converged again with IFRS, let's suppose. And we are also giving Indian AS, which is converged with IFRS. At least comparison is possible because language is to an extent manageable. AS is totally different language. India has made the language more understandable, more simpler to the international language. So therefore, merging became very easy. So merging of the FS of the international parent company with the Indian subsidiary is known as consolidation, and convergence of Ind AS with IFRS helps to ensure that this is done smoothly. Consolidation is being done now smoothly and consistently. So the converged Ind AS, IFRS converged Ind AS is facilitating the smooth and consistent consolidation of the FS of the parent company with the subsidiary company. This is all okay, not very important. Any important point? Yes, boss. Now, the question what you're asking is the applicability of the AS and Ind AS, which is my next topic. So who should follow Ind AS? Who should follow AS? That is called as applicability of the standards. That is my next topic, which is chapter number 3. Now we're doing chapter number 1. In next 20 minutes, I'll be done with chapter number 1. We'll take a break. Sorry. We'll take a break. After the break, a fresh new recording will be discussed or started for chapter 3, where I'll be answering your question. Brescia. Sorry, ma. Now, you have a question. Can you flip your textbook? Go to the book back questions. What do you mean by carve out and carve in Ind AS? In the Ind AS. Ind AS is there applicable to you at what level? CA final level. But you have question based on this, which means to some extent they have covered the topic in your inter also, which I have discussed now. Explain the significance of emergence of IFRS as global standard. Answer. Briefly explain the process of issuing Indian AS. Explain the objective of accounting standard in brief. State the advantage of setting the accounting standards. Pakka theory question. Now tell me, what is the meaning of carbon and carve out? What is the meaning of carbon and carve out? I will tell.
Yes, sir.
Now, sir, you say you only have to say, sir. For that only paid fees, no. We don't know anything. What does carbon and carve out in India is? Government of India, in consultation with ICI, Government of India in consultation with ICI decided to converge with IFRS. We converged with IFRS and did not adopt accounting standard. That is, we did not adopt IFRS as is. We did not adopt it as is. As is means what? ASIS means what? As is. AS doesn't stand for accounting standard. As is means what? As it is. We did not adopt it. That is called as is. It's not my creativity. It is the English language. So while Indian AS, that is Ind AS, is substantially aligned with IAS or IFRS, there are modifications made to suit Indian economic, legal, and regulatory environment. One more time, sir. We had a significant problem. We wanted to raise the money at the international level, global capital. We could not raise it. We wanted to list our stock in the foreign stock exchange. We could not deal with it. Why? What is the barrier? The barrier was the language. The accounting standard that we prepared, only we understood. The foreign companies, they prepared FS based on IFRS, only what they understood. So they were not understanding our language. We were not able to understand their language. But we were very clear that we wanted to take our business at the international level. So therefore, to meet that objectivity, what did we do? We came out with a new standard called as Ind AS, where we try to match our language with the foreign language at least 80 to 90%. But still there is a difference, no? 20% there is a still difference. That difference is why? Because that 20% did not suit our economic, legal, and regulatory environment. So we modified it. That is what this point is trying to say. Government of India, in consultation with ICI, decided to converge with IFRS. So we followed a convergence strategy. We did not follow adoption strategy. Why? Because the India substantially means what? 80% is aligned with IFRS. We follow IFRS almost 80-90%. But remaining 20-10% we couldn't follow. We had to modify it so that we can make that India suitable to our economic, legal, and regulatory environment. Okay, not okay? Online people, okay, not okay?
Okay, sir.
Okay, sir.
Now, there are three broad level of differences. One is called as terminology differences. If you ask me, sir, what are the modifications? There are three categories of modifications. One is called as terminology differences, which means there are certain terms which is used in IFRS. We did not take it as it is. We changed the name. For example, as per IFRS, it was statement of comprehensive income. As per IFRS, it was statement of comprehensive income. It is called as SOCI. We said that we'll call this statement of P&L. They called that in IFRS statement of financial position. We call that as balance sheet. So there are a lot of terminology changes. Is it a big change? Is it a change where the global investors say, no, if you only put same terminology, I'll invest, or else I'll not invest. Chiller changes. So in foreign investors said that no problem, you change. Still I'll invest in your company. Then second modification, removal of multiple options provided under IFRS in the accounting principles and practices, which means IFRS principle based. IFRS principle based. What is the meaning of principle based? They said we believe in flexibility. Depending on what your situation is, depending on how the transactions are, their nature, their scenarios, you accordingly, speculate that. You accordingly understand that. Based on that, you can modify the accounting treatment that you want to do. According to that, disclosures presentation could be modified. So they give too much flexibility. They give multiple options. One item, do in this way. If not in this way, you can do in this way. If not in that way, do in this way. So they give multiple options. In India, we are very clear that multiple option is bad for health. Too much of cook spoils the broth. Too much of anything is good for nothing. Too much option, good for nothing. So what did we do? We try to restrict the options. We try to restrict with the options. So what did we do? IFRS allowed companies flexibility where they can choose between different methods of accounting for transaction. But under Ind AS, this choice was removed wherever we felt it can lead to a problem later. We sensed that and we tried to remove it. Where we felt that our enterprises, companies can take advantage of that They will take advantage of that. They'll try to deceive us. We sense that opportunity because we Indian people, now we are no. Our government of India, ICA knows how Indian people try to manipulate, how they try to take the advantage of loopholes. So what did ICA do? ICA said that no, this much flexibility to our people we can't give. In your country, people are genuine. Everybody will do properly. In our country, people are waiting where to do fraud. So therefore, we can't give so much flexibility. And sometimes so much flexibility will lead to a lot of confusion. If I give more choice, no, people will die thinking that what to do, what not to do. You go to any big fat Indian reception. You go to sweet counter, 30 varieties of sweet counter. You will die thinking what to eat and what not to eat. Too much of choice also is bad. No? 30 sweets. How much can you eat? 10 sweet at maximum. After that, in sweet itself, 30 variety means in main course, how many variety? That also I should eat, no boss. That also I should taste, no boss. So in 30 feet, filtering out what to eat, what not to eat, headache. Seeing that, sometimes we say, no, sometimes seeing too much of food also, we feel that we can't eat it. Same way, if you try to make your law so much complicated, so many options, looking at that, you feel like not following it. Therefore, we say that we know Indian people. So we will not give too much option, we'll try to restrict it. So in India, the choice is removed to promote uniformity and reduce the subjectivity. Subjectivity means what? Subject to this, do this. Subject to do this, do this. So we gave for different scenarios, different options. Who? IFRS. We said that we will remove the subjectivity. We will not tell ifs and buts. This is what you have to do. We try to come out with that concept. But we were not that rigid as it was in accounting standard. So if in accounting standard is very rigid, very particular, and IFRS is very flexible, Ind AS is somewhere between that. So Ind AS did give the flexibility, but not that much flexibility as IFRS. And they did not restrict the flexibility as it was restricted in the accounting standards. That's why we still say Ind AS is principle based. Because when I compare the accounting standard and Ind AS, in Ind AS still we have more flexibility compared to accounting standards. That's why we say Ind AS and IFRS principle based. But foreigners are more open. So we have to again play with our limits. Under Ind AS, the choice was removed to promote uniformity and reduce subjectivity in the financial reporting of India. However, these changes will not result into carve-out. Now, first 2 points clear. Now, this line you leave it. I'll discuss what this line is. This is not carve-out, they tell you. What this is, I'll tell later. First 2 points clear. I spoke about the modifications. That is the difference between Ind AS and IFRS. So, first difference is terminology difference. Second is what? Removal of multiple options. Third is the differences, huge differences because of our different economic environments. Now, this is called as major deviations. This is called as carve-in and carve-out. Now, what is carve-out? What is carve-out? Removing or significantly modifying the requirement of IFRS. So, IFRS gave a suggestion, one accounting standard. We did not agree with it at all. We did not agree with that at all. We did not agree with that at all. What did we say? We will not accept, because if I accept that norms, it is not suitable to our environment, our business environment, our economic environment. So we did a major deviation. I am telling you to go and write. Who? IFRS. You are telling that no, I will not go to right. I'll go straight. We didn't say left. Right, left, but both opposite. Right, left are both opposite. 180-degree shift. We are doing 90-degree shift. IFRS says go right. We are saying no. I'll come to same location. I'll go straight. Then I'll take a. Sorry, right is this, no? I said this, sir. You understood, no? My emotion is understood. IFRS said take right. What did we say? No, we'll not take this right. I'll go straight and take another right. That is called as deviation. That deviation is called as carve out. That is called as carve out. Removing. What point they said, that point you're removing. Or what point they suggested you are significantly modifying. That is called as carve out. What is carve in, do you think? What point they didn't have? We additionally added a new point called as carve in. So adding a requirement in Ind AS which is not present in IFRS called as carve in. Any problem? So what is carve out? Meaning, when India does not adopt a particular IFRS accounting principle and policy by way of removal or departure, which means either we have removed that point in Ind AS, means the point was there in IFRS, but we removed in Ind AS, or we departed from the Ind AS, or we modified it. when India does not adopt a particular principle or a policy by way of removal or departure of it in India's, considering what? Considering the economic environment, business environment, legal situations of our country, that deviation is called as carve out. That removal or that departure or modification is called as carve out. Why that carve out came into picture? There's a conflict with Indian laws. So whatever was there in IFRS, that was conflicting with our Indian laws. And we were very clear that our accounting standards, be it normal accounting standard or Ind AS, should not be contradicting with the local laws and local regulations. We should not violate the local laws and local regulations. So therefore, if there was any point in IFRS which was contradicting our law, we changed it, we removed it, we modified it. Then, not just the conflict, sometimes the point that was suggested by IFRS was not practically possible to implement. We had a lot of practical challenges in the Indian companies to implement that. Third, the economic realities and business practice in India did not make it suitable for the adoption of that point as it is. So these were the reasons why we had to carve out. Once again, carve in. Additional guidance or requirement given in Ind AS which is not present in IFRS is termed as carve in. Why we put the extra point? Because we wanted to match that with the Indian legal framework. We wanted to match that with the Indian laws, business environment, economic environment. To match that, we had to put this extra point through Schedule 3. So Schedule 3 had one requirement, and that requirement is not there in IFRS. So we had to give importance to this first. So therefore, we had to bring in new points. To improve transparency and accommodate stakeholders' need. Our shareholders had different need. Our stakeholders had a different need. To satisfy them, because in the hunt of satisfying the foreign investors or foreign stakeholders, should not make the Indian stakeholders suffer. So we try to come out with a balanced standard where the foreign stakeholders are also happy, Indian stakeholders also are happy. Both of them are happy. Any problem? Once again, ma'am. Difference caused due to point number 1 and 2. Difference caused due to point 1 and 2, which is terminology difference and removal of the options, does not lead to carve out. So whenever there is a difference between Ind AS and IFRS, and this difference is because of terminology difference, or we are curtailing the multiple options, removal of multiple options, these two things does not lead to carve out. What is carve out? We are doing something which is completely removing the point which is given by IFRS, or the point is completely modified than what is given in IFRS. So either we are completely removing it or significantly modifying it. These two terms will be treated as carve out. So first 2 points will not lead to carve out. The third point, when you do a significant deviation, departure, or a removal of that particular point, these both will lead to carve out. Yes, Purvi. Example. Now, she is asking example of carve out. Why I'm not discussing this point is because this will be your subject matter of CA final. Even though if I talk about that now, we will not know that because Ind AS has not been in a syllabus. So exact example of carve out and carve in you'll get where in the CA final when you do Ind AS. Because you're not studying Ind AS. And now it is not any subject matter of scope also. If I go too much deep also, gone. Now, okay. So in CA final, I'll be taking that. That time you can listen to. If at all I take. What happened? Any problem? Done? So guys, with this, I'm ending this video. With this, chapter 1 is over. Your responsibility is now to go through the entire chapter 1 theory. Entire chapter 1 theory, almost 70-80% points I've covered in the summary notes in a very crisp manner. But still, I want you to go through all the questions. Yeah, can we do MCQs first? We'll do. Last few are pending, no? Everything is over? Everything over. Okay. Now they're asking what is the process for issuance of Indian accounting standards? The process of issuing, not accounting standards. We studied process of issuing accounting standards. This is Ind AS ka process they ask. If you read this, point number 7, pretty much it is the same thing what we have discussed for accounting standards. But they're not given in that elaborated manner. They give very simple manner. Just we'll read this. Due to recent stream of overseas acquisition by Indian companies, there is a need for adoption of high quality standards to convince the foreign enterprise about the financial standing, as also the disclosure and the governance standard of India requires. In simple, they're telling that we wanted to compete at the global level. We wanted to create international opportunities. We wanted to deal with international people. For that, the language what they were knowing and the language what we were knowing, accounting standard is not same. Therefore, we have to come out with a new language called as Ind AS so that we can deal with those international people. They have given this in the paragraph. This is the ultimate point that they're trying to convey here. The government of India, in consultation with ICI, decide to converge and not adopt IFRS issued by ASB. So here also, ICI's constituent body, already constituted body called as ASB. So the same ASB has been given the responsibility to develop Ind AS. So which means ASB will again identify the areas where the problem is required. Now here, apart from identifying the problem here, what they will do? They'll also be consulting with IFRS. Because now the purpose of Ind AS is what? First to study IFRS. Study IFRS. Now they will study IFRS, and in that what is applicable to our country and what is not applicable to our country, that they'll sit and assess. So now the study group of ASB, what they will do? They'll completely first understand IFRS. What IFRS is saying. Whether that we can adopt as it is or whether we can change the modified points here and there, they will try to assess. And then what they will do? They will issue the accounting standard. The government of India, in consultation with ICI, decide to converge and not adopt IFRS issued by ASB. So here, Ind AS is issued by ASB. The decision of convergence means what? We are trying to converge IFRS, not adopt. Converge means what? We are only taking the 80-90% of IFRS, not fully 100%. The decision of convergence rather than adoption was taken after the detailed analysis of IFRS's requirement and extensive discussion with various stakeholders. Means what? First, ASB had sit and thoroughly studied IFRS. Then they came out with an PD. Then this was discussed with multiple stakeholders, Council of ICI, other regulatory bodies, etc., etc. We took their stakeholders. Inputs, points was taken. Then the ICI had worked towards the convergence of the global accounting standard by considering the application of IFRS in the Indian cooperative environment. Recognizing the growing need of the full convergence, same thing they are repeating. ICI constituted a task force to examine the various issues involved. So here is not group, study group. Here they have something called as task force. So ICI constituted a task force to examine the various issues involved. Therefore, accounting standard what does? Study groups. Here it is task force. Ind AS are issued by Central Government of India under the supervision and control of ASB of ICAI and in consultation with NAFRA. Sorry. Ind AS is again notified by, okay, Central Government here means who? MCA. Central Government means who? MCA. So Ind AS is finally notified. The word issued is not right. The word is notified. Ind AS is notified by Central Government. Central Government here is MCA. Under supervision means what? ASB will recommend it. MCA will consult with NAFRA. Then they will notify. NAFRA recommends these standards to MCA, and MCA has to spell out the accounting standard applicable to companies in India. Am I clear? Same thing. Almost same thing. Almost same thing. So this is the similar procedure. Here and there the deviation could be there. But ICA here, they have not got that much in depth. As much depth they've gone for AS. That much depth they've not gone in AS. So this much if you write also more than sufficient. Any problem? So now it is 11:49. 11 minutes break. 12 p.m. sharply we're going to start with the next topic called as applicability of accounting standard, which is chapter number 3. So guys, online people, stay back. Those who are watching recording, I'm ending this video here. I'll be starting a fresh new video for the chapter number 3. So guys, see you all after 11 minutes break. Until then, bye-bye. See you. Take care.